Good morning and welcome to this first of my live analysis, market analysis and trading with myself, Charlie Burton. You should be able to see me in the little box here in the corner. So yeah, a warm welcome to you. So this is a first in a series of live analysis and trade webinars with Tickmill here with myself. So what we're going to do is do what it says on the tin, bit of analysis, and then look at the markets in a live context and see if there's any trading opportunities, which there may well be actually this morning, setting up as I speak. So Tickmill have kindly given me a live account to be trading with, and so I will be using their money. So that always makes it fun, and so we'll go and have a look at everything, but I'm just making sure that everything is working here. It looks like it is. So a welcome to you. If you're logged in and you are watching this live, do say hi if anyone's just coming in. Right, so I'm going to go straight over to the daily charts, then I'm going to work my way down through the time frames. So we're going to start off with the dailies and then work our way down. So as it currently stands, we're starting to see actually, and I'm going to be looking at the major currencies here. So I will look at the stock markets as well, but in the main, we're looking at the major currencies. That's what I'm looking at. You're seeing me looking across is because the camera's in front of me, and I'm looking at the currencies over to my left on my other screen. So it just so happens that there is some movement already going on here this morning. So we know, most of us know what the trends are in the currencies. So it's really about, okay, well, what's happening on the day. Now, I know I've got a load of moving averages on my screens here, and what I call my bands as well. They're just two moving averages. They're short-term moving averages here. So one is a 5 EMA set to the high price, and the other one is an EMA set to the low. So they're two 5-period exponential moving averages, but not set to the closing price. One is set to the high, one is set to the low. So that's what these two black moving averages are here. And as for the rest, they're sort of standard moving averages, a 20, a 50, a 200, and a 100 on my charts. So let's be very clear. The trend is up, and these markets are in a very clear upwards trend at the moment. But when it comes to very short-term trading, when you're an intraday trader, there's always opportunities on either side of the market. Now, talking of the market at the moment, we can see what retail are doing here, because retail are, crazy. So it's something like 73%, I was looking at this earlier, are short the euro dollar, for example. And they are on average 456 pips underwater, because so many retail don't use stop losses. So there's nothing wrong with shorting the market, but have a stop in. So, but they don't. So anyway, that's where retail are at the moment. Now, so from overall, if I'm swing trading, I want to be on the long side. So from a swing trading perspective, I have no interest in being short. I only want to trade with that trend. So personally, I've been long since about 108, just above 108 at the end of late March. But from a swing trading perspective, I would only want to be long. From an intraday perspective, I'm open. I think you have to be open on an intraday perspective, because anything can happen on any given day. There are certainly times when I still would rather be long intraday, but there are little setups that come along. So firstly, let's come out just briefly here to the quarterly chart of the euro dollar, and we can see it's come up into my quarterly 50 moving average there. So it did that yesterday. Overall, this is a great breakout that we've had of this sideways consolidation. This is now on the monthly chart, so it's a great breakout from that 2-year consolidation. So it all looks pretty reasonable overall for more upside in the coming weeks and months. But what happens on the day is, of course, very individual. If I come to the weekly chart, same thing. We are in a defined upwards move now, having broken those highs. Could we make a case, an argument that we're a little bit stretched on the upside? Yes, but markets can push higher also for longer than you would think. So I would never just short something just because it looks stretched, So okay, so coming down to the daily charts, where would I want to be long if I was looking to get long now? I may put an order in on this account actually around this 112 zone. That's those high area from. That's that high area. So my dog's just come in. He's around here somewhere. That's that high area from September of last year. So if we were to see on a swing basis a retracement, then that would be the zone that I would be wanting to initiate any new trades. One thing I must mention here is, and we have our risk warnings on, that anything that I'm talking about here today is not deemed to be advice. It's all for educational purposes, and I'm just talking to you about what I'm doing. So it's just for educational purposes. So the trend is up. I want to, what I call, fade the short-term trend in favor of the long-term trend. So what does that mean? If we do get a pullback, I want to fade the pullback in favor of the larger term move, the bigger picture move. So that's going to be what I would look for there. Now, with regards to, that's all very well, but what about in the very, very short term? Well, we need to come down because we can see that there's a little bit of selling coming in here early doors. So let's have a look at this on the smaller time frame. So I've talked about the bigger time frame. May put an order in shortly on that basis because that may get filled in the week or two ahead. What would help produce a pullback would probably be a bit more positive vibe with regards to negotiations with the EU and anywhere else actually with regards to the tariff negotiations. So if it looked like the EU and the US are getting closer to some kind of trade negotiation deal, and elsewhere, Japan are first really, then I think that would set the path for a retracement. But in the meantime, we'll have to just see. We're very much in a strong momentum move overall. But on the day, we're starting at the moment, we're pulling back a bit. So let's have a look at all of this. On the euro here, first of all. So I'm coming down to the hourly chart. Is it really saying too much to me on the hourly chart at the moment? No, not really. So again, all I have on here is I've got an MACD indicator down the bottom. I use that for divergences. And I've got a few moving averages up here as well. Standard sort of moving averages plus my bands, which is just 2 5-period EMAs. So yes, the euro's just come off a little bit here this morning, but again, against the backdrop of very much a strong trend. Let's go and have a look at the pound, because I think the pound may be interesting here as well. Again, we've had this fantastic run to the upside on the likes of the pound. But the pound, what's technically interesting with the pound is the pound has come up now into its September highs. Okay, so the pound's come up into that zone there. And so, although the trend is firmly up for the pound as well, we have come up into some resistance. So, could we be close to some form of taking a breather here? We'll have to see. So, again, I'm going to come down to the smaller time frames in a moment. What I'm doing at the moment is just setting the scene. The Australian dollar has come up to pretty much its 200-day moving average. So the scope for potentially taking a pause there. Then I look at the New Zealand dollar. So what I'm doing when I'm looking at any particular major currencies, I want to see what the other currencies are doing as well. So against the dollar, I never want to just be blinkered and only look at a single currency. I want to see, okay, well, if I want to trade on one of them, I want to at least have a bit of a view on the others as well. So, for example, the New Zealand dollar, is there any major resistance? A little bit here on the weekly chart as it came up into that weekly 100 there, moving average. And again, I'm just talking about moving averages here. Just coincidental that the euros into that quarterly 50 and the New Zealand dollars into some moving averages. I do use technical levels as well, but it just so happens that that they're there. Now, what I think is interesting on the hourly charts now, if we start coming down on the smaller time frames, is that we've seen some minor double tops this morning. So from yesterday's high, we've breached that, which is great. So we've gone higher this morning on the New Zealand dollar, but we've got a divergence in place. So we'll note that. We will note that that we've made a slightly new high, but we've got a divergence, and it's not just on the New Zealand dollar. So let's go and have a look at the Australian dollar as well. So double top, making a minor new high here, but we've got a divergence here. So when I say we've got a divergence, what I'm looking at is the blue MACD line. The yellow one is its moving average. So the blue moving average line is we've made a peak here and we're making a lower peak currently. What's important is I want a red bar, which we have got. So it's all very well saying, well, we've got a divergence, but I need price to close back inside my bands as the first port of call. And that is where we're at right now. We've made the double top and confirmed at least by having a red down bar closing back inside my 2-5 EMAs. So if I come back over to the pound, it's the same there as well. So coming back over to the pound, I've just looked at a couple of the other markets and we've got similar patterns coming through, which is good. So we've got those similar patterns coming through. We've got a double top here on the hourly chart of the pound, and we've got a divergence here in place as well. So overall, we're getting some ticks coming in, we've got divergences here on the hourly charts on a few of these markets, plus we've got the pound into resistance on the daily charts as well. Now, like I've already said, I would on a swing basis I would only want to be long, and I am long on a swing basis, but this is, intraday. The pound has had a very strong run up into a resistance level from September of last year. So I think there's a growing justification for placing a trade on the pound dollar at some point here this morning. So we've got plenty of time ahead of us to be looking at this. So like I've already said, we've had this down bar on the hourly. So that's good. And so I just want a little bit more here this morning because I'm going to get it all set up, but I want a little bit more just because this is a very strong trend. And so I'm going to be a little bit more cautious with regards to the downside. So I'm coming down to the 5-minute chart. On the 5-minute, we can see we've come down and we've bounced off my 200 period moving average and obviously prior price highs that we can see here as well. So prices have so far come down and it's having a bounce. So I'm not going to bother trading on the short side. I've got the technical setups, but it's a very strong trend. So I want a little bit more. If I'm going to trade it on the downside, I want a little bit more. And what is a little bit more? We need to see this roll back over and breach that low at around about 133.85. So somewhere below 133.85, we'll take it that, okay, if we come back down through there, this is where I'm going to be placing an order. And if we come back down through there, then I'll make that assumption that, okay, we've had a bounce, maybe it's a dead cat bounce, and then we roll over. I'm not interested in shorting it where it is at the moment because, like I've already said, it is a very strong trend and I'd rather just see a little bit more evidence. So if I'm going to short at 133.85, what's the high? The high is at 134, we'll call it 25. So let's start doing the maths to make sure that this is feasible as a trade now. So 85 to 25, it's about 40 pips, isn't it? Right, so that would be a 40 pip stop loss. Okay, so then I have to come out and say, well, what's the scope for the downside as far as risk reward is concerned? Is it worthwhile trading on the downside? Is there enough potential in it? So first of all, let's come back out to the daily chart. So on the daily, is there enough scope to have even the slightest of retracements, maybe back down to 133? Just really shallow as far as retracements are concerned. Yeah, the scope is there. Now, if I'm going to get a trade here this morning, and I better hurry up with the order, then yes, there's some bounce potentials, but we could certainly get through that. If I come to the 4-hour chart as well, we've got a nice divergence actually on the 4-hour time frame as well. So, okay, let's look at getting this set up. So what I'm going to do is bring up the order ticket. So what I'm going to do is put in a sell stop order. Okay, so I'm just going to start building this up. So let's see if we can. We've got in 0.5% risk. So let's see if I can change this order first of all. So we're looking at 133.84. Okay, then I need to put that stop in, and I said 84, it's about 40 pips, so that's about right. Risking 0.5% on the account. The account is 30,000. You can probably see the account balance down here. I don't have any other trades on at the moment, so it's a $30,000 account, so I'm risking 0.5% on that account, which, as you can see, means it's showing that I've got basically $150 of risk, which is about right. So it's the nice thing is when you're trading directly through TradingView here, it works out your risk for you. Once I pop in, okay, I only want to risk 0.5% of the account balance on this, then it works out the lot size for you. So I've got the stop loss of 40 pips. I'm going to be shorting at 133.84 if it comes down. So now this time in force, I'm actually only going to leave this here for this morning just because, so we'll leave this as a day order actually, because this is really all about this pattern here. So if it just goes back up here this morning, there's no point in me being in it, of course, and I won't, or leaving the order there. So let's just get that order done. Okay, so you can now see I've got that sell stop there on the chart. So I'll take us back down to the 5-minute time frame. So if We roll back through below that low that's just been made there this morning as that came off of those prior highs. So if we roll back over, we've got divergences in the background. So divergences are there in the background. So if we now roll back over and break those lows, that'll automatically trigger me in on this trade. What about targets then? So, okay, let's start looking at targets. So, because I can go back into that order and put a take profit, of course, in there as well. Now, with a trade like this, so it's risking 40 pips. If I'm in at 133.84, where am I going to target? Well, there's a nice zone here. I've already hinted at 133. 133 pretty much marks that last high here from a few days ago, around 133, and there was another little blip here at 133 as well. So 133 looks like a nice take profit. It's also my hourly 100 is in that zone, although of course that's going to be moving by the hour. So 133 looks okay. If I go to the 4-hour chart, there's loads of scope to 133. In fact, 133 on the 4-hour chart looks really minimal as far as a target is concerned. So is it achievable? 100% it is. Now, bearing in mind that 50 period moving average is moving up at quite a rate of knots. So again, but that's only once every 4 hours. So if it took its time to roll over, it may end up meeting that 4-hour 50 in that zone as well. So actually 133's got a nice overlap, and 133 would be 80 pips or so of as far as the target's concerned, and actually it works out quite nicely because it's about 1 to 2 risk reward then, isn't it? So if I bring back the take if I can go into the order and amend the order down here, so let's go to the orders. Let's see if it will allow me to modify it. There we go. And if I put a take profit in now at 133, 1.33. Actually, what we'll do is we'll put I'll put the take profit at 133.03, just a few pips above the round number there. So I'm risking 40 pips to make 81. Okay, so just hit modify, and that's now going to put in, as you can see on the chart, let's just get that minimized here. So I've got all the orders in there. So on the chart now, I've got the sell stop order today. I've already had a lot come in. So I've got the double top in the background on an hourly chart. I've got double tops on the likes of the Australian dollar and the New Zealand dollar, so other currency pairs against the US dollar. The euro didn't even do a double top against. If I go back to the hourly chart of the euro, didn't even manage to do a double top. Although, admittedly, the euro had a fantastic run there yesterday. It was the biggest gainer on the day out of those. But nevertheless, we've got a potential double top here. Well, it is a double top on the hourly. I'm just looking for a bit more of a breakdown to trigger me in. But we have already had that red bar. So normally, if I get a divergence, then I get the red bar closing back inside my bands like that, then that would normally be enough. But this is such a strong trend that I want a little bit more confirmation, and we'll see if it breaks down below the lows that it's already made when we came down to that 5-minute chart. Let's see if it can roll over and break that. What would make me cancel the order? I would cancel the order if we broke back up through today's highs. So I would cancel that order for the time being. It might be that the divergence ends up, still being there, and it resets if it comes higher and then it comes off later. But for now, that order would be cancelled. So that's where we're at this stage. So interesting this Tuesday morning to have setups. You never know in the space of what is supposed to be a 1 hour webinar, whether you're going to get some setups or whatever. So it just so happens today that there'll be other webinars that I'll do live where there won't be, but that's where we're at. So some nice little double tops patterns with divergences here today, and some very clearly defined risk parameters if the pound rolls over. So I'm just going to come back out to the daily chart. So yeah, okay, we've got all that. So let's take this back over to the euro dollar, because I use the euro dollar as the benchmark currency that I'm analyzing more often than not. So I just got another couple of bits for you overall. I think last year I was, and throughout this year, if you've been to any of the other webinars that I've been doing with Tickmill, this front page story from The Economist came out late October of last year. The envy of the world, and if you've seen any of the other webinars that I've been on, I've been using this screenshot because it was such a red flag to me back late last year and even coming into this year as a sentiment measure that you've got front page articles with the dollar rising for the moon sort of thing, and the envy of the world. And you do wonder at that point, oh blimey, this is a sentiment measure. Let's just see what happens over the months ahead. And then of course everything's changed to the extent that if I bring up another screenshot, just several months later now, The Economist has now got a new front page headline just last week saying how a dollar crisis would unfold. So it's almost the opposite now. But from a sentiment perspective, would I then take that as, this is a major problem, and and therefore, we've now peaked as far as the currencies against the dollar, or the dollar has troughed? Well, certainly in the short term, anything can happen, but it's not saying the dollar is doomed. It's just saying how a dollar crisis would unfold. So I don't think the sentiment's quite there yet, but at some point we would be looking for the opposite at some stage of this type of article to be coming through in the lights of The Economist, Reuters, Bloomberg, all of those sorts of news sources. So I do think it's interesting, it's fascinating seeing the sentiment picture there overall. So I'm just double checking the markets here. So we've come off the back of that super bullish US economic sentiment to everything turning over. Obviously, if I come over to the S&P right now, we had a bit of a down day again there yesterday. Oops, wrong. Let's go over here. Yeah, there we go. So I have so many different new feeds that come through. So so we've had there's a lot of negativity towards, of course, the stock markets at the moment, as there's lots of uncertainty around the trade deals and how that's all going to play itself out. But overall, from a sentiment perspective, I'll be keeping an eye on all of that negative sentiment that's out there at the moment, because at some point that's going to get really stretched. Now, I know, for example, we can look at things like the fear and greed index, which has got really negative in the short run just a couple of weeks ago. However, and there is a big but here, and there we go, I'm bringing it across. Retail investors were buying the dip right into those big spike lows. So investment platforms were reporting a big spike after the tariff announcements came in. So I think it was something like a 200 million increase on one of the platforms into the SPY ETF. So that doesn't suggest to me that there's fear in the markets. People have learned, buy the dips, and that is true. Buy the dips. But when there's massive spikes, and the buying the dip, this isn't short-term traders, this is more investors who are buying into things like exchange-traded funds. But when en masse, they're massively coming in on that, it was on that Friday there, right, Friday the 4th of April, we saw this huge spike in buying from the retail crowd. It just suggests that maybe there's not that much fear. So although some sentiment measures of volatility index and options trading had got stretched, but actually retail were still buying. So really, as we all know, it's when retail are a bit fearful of buying that we're more likely close to a proper low. So my belief, from a sentiment perspective and the fundamental backdrop of uncertainty here at the moment and around all the fundamentals and what that may produce, I think the US administration are actively seeking a slightly weaker economy. Then I think it suits them. They want to see a bit of a reset in the stock market as well. So all roads at the moment lead to, at the very least, a retest of the lows at some point. And then we'll see beyond that whether we do come a little bit lower. So that's my view on the stock markets at the moment. So I don't think that we had quite the flush out from the retail crowd. I think they're all happily buying, and massive spikes in volume into exchange traded funds. That's not the sign of a capitulation when everyone's buying. So I don't think we're there yet, but let's see if over the weeks ahead whether we can get back down to those lows and do some sort of retest and potentially come a bit lower than that. So I'm looking towards these lows and then potentially down to sort of 4,500 area. Why 4,500? If we just zoom out a little bit to the weekly chart, we're looking back down into this zone here from those July price action from 2023. So around 4,500. Okay, so that's a little bit there as far as my overall view is concerned with regards to the morning FX King, with regards to the US stock markets. Let's just have a quick bounce back to the currencies then. They're sort of holding here at the moment. Like I've said, I'm a bull towards these currencies. Overall, I've been long the euro for a while, from late March. So I'm very much bullish towards these currencies. But on a short-term basis, is what I was saying earlier on, if you're intraday trading, then you can trade on either side really. But from a swing basis, I'm more or very short-term trading, like I'm putting in there on that pound. We'll come back to the pound in a minute. But overall, I'd be much more interested in buying a dip rather than, and hopefully we get something like that, than actually trying to sell the dip itself. I'm not bothered about that. So when we look at, if I come back out to the monthly charts here, the scope for the euro dollar and the other currencies is still very much to the upside. I think this is there's a changing of the guard going on. There are fundamental reasons why the euro should continue to benefit over the medium term against the US dollar and to varying degrees some of the other currencies as well. So I think it's a good story here with the fiscal spending story here in Europe, with Germany's massive spending, but also much more spending on things like defense that benefits manufacturers. It's just good, and then it filters through into the economy. So I think there's a good story here for still more upside overall, even if we get a trade deal at some point in the next couple of months. A trade deal itself could lead to a bit of a relief in the dollar. So then we see the likes of the euro pull back and the other currencies pull back a bit at that point, as and when a trade deal. It depends on how it looks, but if it looks good, then that might be enough to at least give them some sort of pullbacks. So I'm looking out for that at some point, a retracement, but all paths lead to higher currencies until proven otherwise. So I would like to be on this account now long the euro dollar at some point. So from where? Now it's an obvious level, but we've got those highs from around the 112 mark of last September. So we blasted through them just a couple of weeks ago, and if we do get a pullback into the 112, I don't know if we will, but I wouldn't mind being long there on a swing basis. So I'm actually going to set up an order here on Tickmill, the Tickmill account. It's a live account, so trying to make money for Tickmill here. And so it's their account, so I'm going to be looking to make money for them on this. So around about 112. Where would I want to put a stop? Okay. Now, given the sheer ranges that we've got, I would want to put essentially a 200 pip stop on that. And people always get really funny, like retail traders. Oh my word, that's a 200 pip stop. That's huge. Well, it's not relative to the targets. Okay, well, what's the target then? Well, the target would be 120. So that's an 800 pip target with a 200 pip stop loss. So as a swing trade, okay, it's a 1 to 4 risk reward. Okay, that's good. And so I think people get caught up in how many pips a given market might or a given trade might have as a stop loss, and you just position size accordingly. So let's go in and put this in. I can see the pounds. Actually, before we let's go into the pound, because I think the pound's just about triggering to the downside. So let's have a look here, because that has come back down. It must be just on top of the there it goes. It's just triggered in. So it's literally just triggered in the pound here. So if I just drag up, and if I click on positions now, we'll see, yep, that I'm short down here now on the pound dollar. So that's just triggered me in there. So, okay, right. So let's just zoom that, take that back down for a minute, and then zoom back down to the 5-minute chart so we can see what's happened. There we go. So it rolled back over. Don't know what that arrow's about. Oh, it's just that's where it triggered the sell. So it's rolled back over. We let it. I didn't, because of the trend overall. I wanted to see that bit more of a breakdown. So let that bounce and then roll over on this occasion. Even though, like I said earlier on, the divergence itself was fine, but I just wanted a little bit more. So now it's triggered through, that's just taken me in. So we've got the stop up here, and the take profit is right the way down there, just above 133. So I don't suppose this is going to go to 133. Even if it goes there, it's going to get there in the next 20 minutes, unfortunately. So I don't suppose that's the case. And I'm only risking 0.5% on this trade as well, because it is going against the overall trend, and so I want to grade it accordingly. So anyway, so that's in, and I don't think there's anything more to add on that. If I come back out to the hourly chart, then we can see that target zone down there as well. Okay, so we'll see how that gets on. there's no point in just sitting there watching it. And there's not really much trade management to do with it either. The stops at the high, I wouldn't really be doing much trade management with it. I tell you what, well, if price gets down to the 50 moving average here, then the stop loss can be moved down a little bit. So there's a little bit of management that could happen once price gets down to the 50, because price could just come to the 50 and then just bounce all the way back up. I have stats on that, so I can move the stop down a little bit at that stage, but not a lot, just probably 10 pips or so. I'm looking at, not rather than having it right at the absolute high, just up in this zone up here. So probably about 10 pips or 15 pips lower. So we'll keep an eye on that just in case it has a little bit of a run there for the 50 at that stage. But the overall target is right the way down here. So risking $148 to make $299 as it works out. So it's about a 1 to 2 risk to reward. Now coming back over to that euro dollar then. So again, this is on the hourly. Let's take this back out to the daily chart. And I want to put this swing trade order in on this account as well. Like I've already said, I've identified 112 as an area. Whether it comes back down to 112, we don't know. But it's an order that I can leave there for a while. If price just starts pushing a lot higher, then I guess at some point I'll just cancel the order. But for now, I will put that order in. So let's bring up the trade box here, and it's going to be an order, a buy order. On this one, let's change it to a limit then. So it's going to be a buy limit order. So let's type that in, 112. I'll put it in at 112.05. So just a few pips above the round number again. And let's just make sure that we've got this. Don't need that. Okay. Then I have to click on the stop loss box. So I want to have a stop loss of 200. Okay. And I'm risking 1% there. So that's still $300 on a $30,000 account. So that all looks about right. So that's an entry at 112.05 with a 200 pip stop below it, and I'm targeting 120. So I can actually put the take profit in there as well. I'll put the order actually in at 119.80. So just 20 pips below the big round number up there at 120. Why 120? I'll come back to that in a minute. There is a reason for that. So I'm just reviewing all of this. So far, I'm putting an order in. It's a buy limit order at 112.05 with a 200 pip stop loss, which means it's got a stop loss at 110.05. And then a target at 119.80, so just below 120. And so all of that for a swing. Okay. Now that could take a while. Just press place order there. So that is now there. If I just get rid of that for a minute and I drag this up and I click on orders, there it is. So I've got the buy limit on the euro there, all the information, limit price at 112.05. I've got the sell stop at 110.05, and then the limit sell at 119.80. So it's all there. So that's where we are at. I see the pound dollar trade is working in my favor here at the moment. Right, so I've got that order for a swing on. Now let's come back to that just briefly for a minute here. Why 120? We need to go back to that that monthly time frame there, and on the monthly, yeah, you can see my 200 period moving average is sitting just north of 120. If I do a fib retracement from the highs of 2008, and I take it down, a 38% retracement is about 120, just a bit above 120. Okay, so we've got a 38% retracement of the entire move from the highs of the financial crisis, really, down to the lows of 2022. We've got an overlap there with a 200-month moving average, and it's coming in, of course, into this cluster of, or this price level, going back historically, where we can see, and I can take it all the way back here as well, it's a whole zone there, and it's a big round number. So 120. Now, like I've said, I've put the order actually in this instance 20 pips below that 120 level. So don't often put the order right on a round number. So that's pretty much that. So I'm risking $300 on that trade, by looks of things, to make $1,162. So as it turns out, that's just under 1 to 4 risk reward. Okay. So it's got a bit of a work to do in order to pull back into that zone, but we'll see. All of a sudden, we've had an amazing run, and all of a sudden, if we do pull back over a period of a week or so, then that will come in. Oh, one thing I do need to make sure on that order, that it is actually a good till cancel order. So let's just come in. Yeah, it is. I just want to make sure it's a GTC there, because I want to leave that order open. I don't want that to just be a day order and then it cancels it at the end of the day. So just double checking that there. Okay. Right, so let's come back to the pound dollar, because this is the trade that I am in here this morning. So just as a recap, why trade the pound this morning? The pound yesterday had come up into those highs of last year, into the highs of September. So we knew, if I can put it onto a weekly chart here, we knew we were into a potential double top zone where there can be a little bit of selling coming in. If I then take us back down to the hourly chart, we had this divergence here on the hourly, and remember, it wasn't just on the pound. There was divergences on the Aussie dollar and the New Zealand dollar as well. We'd had the divergence, the double top, and the close back inside my bands. That confirms the divergence. The divergence is here in play, but I'm looking for price to confirm. Then we look for that breakdown to then actually trigger me in today. Because overall, we know we're trading against a very strong trend, and overall on a swing basis, I'd prefer to be on the long side rather than the short side. But we have got these divergences here into resistance. That's the point. The resistance there that we've just talked about on the daily chart. There is also a divergence here on the 4-hour time frame as well. Again, from this previous peak here to where we are at the moment, then we've got this divergence on the 4-hour time frame as well. So all that added up to warranting a live trade here this morning. And so if we come back to the hourly chart or even the 5-minute chart, we can now look and see, okay, yeah, it broke. We waited for it to break back down below that low. That's just some of the minor details there today, that price had come down into prior highs there. I wanted to see if it rolled back over and then just trigger me in there, rather than, yes, I could have shorted it up in this zone on a little bounce, but again, just being a little bit cautious given the strength of the trend overall, and just waiting for it to trigger me in on the downside there. Now, I've said that at some point I would trail that stop down. So that stop would get trailed down. Let's go and have a look at that hourly time frame there. If price gets down to the hourly 50, which is currently at 133.50, so and we're at present, we're at 133.74. So if we get down to 133.50, then I'll trail that stop down to about 134.15 area. So it'll get moved down by about 10 pips. Okay, so if we get down to that next level at 133.50, but the overall target is down there just above 133. So unfortunately, we can't be here all day monitoring this trade, but that is the trade that's in. If it turns all the way around and breaks back up to the upside, I lose 0.5% on that trade. One thing when it comes to intraday trading is that, generally speaking, I recommend people risk less on intraday trades, and there's a couple of reasons why. I would recommend risking less on intraday trades because of the sheer noise factor that does go on for intraday trading. So if you're intraday trading, it probably means you're going to take more than one trade per day. So you can afford to be risking less. Where a lot of people go wrong is they'll risk 1 or 2% on intraday trades, and then very quickly, if they go and take 3, 4, 5 trades in a day, they could very easily be 3, 4, 5% or more down in a single day, which is really rich. So I would recommend 0.5% or less for intraday trading. The very nature that you're doing more trades means that I think you should downsize your risk. That's my view. Of course, different people have different views, but I'm always going to look at trading from a more cautious perspective, and I would rather traders were a little bit more cautious. If you're having a good day or a good week or a good month or whatever, yes, you can always look at it and say, I could have made more money. Yes, but you always have to look at, but what if I lost? And I think that's the big thing. Yeah, but what if I'm wrong? What if I have a drawdown? Can you handle being down 5% in a day, or very quickly 10% in a week if you're intraday trading, risking 1% or even 2% per trade? So I would rather people downsize their risk rather than even be risking 1% on a trade. So 0.5% or less, maybe 1/3%. I think for a lot of traders that would be better. Okay, so we're coming towards the end of this session. We were just trying to make sure that all the software was right. It was my first webinar using completely new streaming software here with Tickmill. So hopefully it's all been working well for yourselves who are sitting there listening along, and you've seen a little bit of what we are doing here. Now I've got another live session coming up with Tickmill. I believe it's next week. I'm going to double check. It's at a different time, but I'm just going to double check that it's next week. Yeah, it's at lunchtime. It's at 2 p.m. UK time. That's next Tuesday. So we're going to be doing that around the US session, around as US stock markets come online. So it'll be a different nature of session, of course, to what we've just been doing here this morning. But I do hope that this morning's session has been useful for you, where you've seen me breaking down, doing a little bit analysis. It's all squashed into a very short period of time, of course, but we were looking at the monthly charts first of all, and the quarterlies, and then bringing it all the way down, and then identifying some trade setups here on the intraday hourly charts there this morning, choosing the pound dollar as the prime one because of the resistance that it was into yesterday, and we'll just see how it gets on. And the other nice thing is that I've managed to put that order in for a swing trade on the euro dollar as well. So we'll see between now and next Tuesday afternoon whether that order gets filled or whatever. I'll keep an eye on this trade as well, but it's not really anything too much to do with it, other than at some point move that stop down slightly. And that's about it. Are there any questions at this stage? Where's the camera? There it is. Now, the thing is, I know that there's a slight delay. I think it's about 10 seconds or so from when I'm actually talking for it to getting through to you. So I know I've got to wait here just in case anyone's typing away from the point when I've just said if anyone's got any questions. So I'm just going to wait for a little bit. But it all looks like on this first attempt at this webinar that it's all worked fine. I'm just going to check off screen here at the moment. No more messages from Tickmill, so that's probably a good sign. Evie, if you're there, then I'm assuming she's probably listening in. And yeah. Now JB, how do you use the COT report for the euro? Yeah, I actually had the COT reports up here for the euro, just in case I wanted to bring them up. And what I'm generally looking for on the COT reports, JB, are major extremes. When I say major extremes, extreme highs or lows. So like back in 2020, that was an all-time high in long positioning for the euro. And back down here, you can't quite see it, in 2015, we were at an all-time low as far as positioning was concerned at that stage. Where are we right now? About in the middle. So the positioning right now isn't saying too much to me. So that tends to be what I'm looking for. I do look at divergences with regards to positioning and the market itself as well. So sometimes when the hedge fund managers there, the large speculators in the commitment of traders reports, if they're doing something which is very obviously different to what the market is doing, then I'll look at that as well. But I combine that with the technicals. That's a whole session in itself, JB. Unfortunately, I don't have the time to do a full hour on it, but yeah, that would be a whole session talking to you about how I use the COT report. But in essence, that's what I'm looking for. So right now, like I said, I think we're in about mid area of from a positioning perspective, so it's not saying too much to me at the moment anyway. Okay. And that looks like a wrap there. So I'm going to bid you farewell. It's just coming into 9 o'clock. I do hope that it's giving you some food for thought there on the analysis approach. Yeah, another time, JB. Probably not. It's not one for one of these live sessions. Well, that'll have to be a specific webinar on that topic. Yeah, when I get to do a non-live trading webinar, we've got a series of live trading webinars coming up, but I will endeavour to do that in the future because it's a great topic. So I do hope that today's session has been of use, seeing a little bit of what I get up to. I'm trying to cram it all in and not gone into masses of detail, but probably enough. So I shall leave you to your days, and I'm back next Tuesday, 2 p.m. with Tickmill. That's 2 p.m. UK time. So that's over that hour of the US stock markets opening officially. Obviously, the futures are always open anyway. But so we've got another one coming up, 2 p.m. UK time next week. And so hopefully I'll see some of you there. And for now, I shall press stop on the record.